Hi, this is Alex Fensky. I'm the lead agent for the Chicago Southland Homes team here at Keller Williams Elite, and coming to you today, July 6th, 2022, with our June housing market update. So what I'm going to go through is some important metrics that tell us what's going on in the housing market today, what that means we can expect for at least the foreseeable future, and what you probably want to do about it if you are thinking about selling a home, buying a home, or an investment property or anything like that. So I'll go through some of the stats. My stats are from very valid sources. I get all my market information from Midwest Real Estate Data LLC, which is basically the multiple listing service for Northeastern Illinois. And then I get my mortgage data from two places, the St. Louis Fed and Mortgage News Daily, which does a daily survey of mortgage rates out there. So that's where all my data comes from, and that's what it covers, residential property in Northeastern Illinois. So everyone's always talking about how the market is changing and all this stuff. And the fact is it's always changing. But there's always a little bit more than meets the eye. Changing doesn't mean that we're suddenly in a buyer's market. It doesn't mean that there's suddenly not multiple offers on well-priced properties. It doesn't mean that prices are falling. So hopefully I can set the record straight here with some of the actual information that we've got here, because this is all fact. So number one, market time. The number of days it takes for a home to go under contract is still hovering around all-time lows. Depending on whether you measure it median or average, it's either maintaining at an all-time low or just hit a brand new record all-time low. Market times overall are still extremely short. The number of showings per listing has come off of its peak. However, it's still way above where it normally would be this time of year. The number of showings per listing is down compared to the last couple of months, but it's still up significantly from where it normally would be in June. So market time, running strong. Now let's talk about the number of new listings. This is the number of sellers that said during the month of June, we're listing the house, let's get it on the market. And that number was down 13% compared to last June. It actually is the lowest number of new listings in any June going all the way back to 2013. So in 9 years, this is the lowest number of new listings that have come on the market in June. So when we talk about the market shifting and things like that, it doesn't just mean that everything is unequivocally getting softer. We're saying that there's not enough people that are deciding to sell their home right now. That's been the case for a couple of years now, but that hasn't changed. Pending contracts are down by about an equal amount, 15.3%. Compared to June of last year. So the number of new sellers entering the market has dropped, so has the number of buyers. New listings went down, contracts went down too by about the same amount. And that's been tracking pretty much neck and neck all year. Fewer transactions overall, but the balance hasn't really shifted. And the number of pending contracts at the end of June was about the same as it was June 2015 through 2019. It was actually a very ordinary June in terms of the number of contracts pending. Now, housing inventory is still incredibly low, painfully low. It's the lowest June on record. The number of homes available is down 21.4% compared to June of last year. And it was down June of last year compared to the June before, and the June before, and the June before. So by far the lowest June on record, down 57.5% compared to June of 2019, which was the last normal or pre-COVID June on record, down drastically since then. Still a shortage of homes. And so when we look at the market balance, months of housing supply, it's ticking up a bit. We're heading towards a balanced market, but for reference, a balanced housing market is 6 months of housing supply. Our record low is 1.2 that we were at earlier this year, and we're up to 1.7. So we got a lot of ground to cover before we get to a balanced market. And anytime we're below 6 months, you will not see housing prices fall. You have to be over 6 months of supply in order to see housing prices actually go down. What we're seeing is they're going to keep going up, just not as fast as they were. And speaking of which, median sale price. Now, the median sale price in our MLS has now hit a new all-time record high. In fact, it came in 7.3% above the prior record, which was June of last year. So it's actually up 7.3% over its prior record high, all-time record high for residential property in Northeastern Illinois, after it sort of stalled a bit when mortgage rates skyrocketed out of the blue. People kind of reacted more then, but now they're realizing there still are not enough homes available. I still have to compete based on price, and that's going to continue pushing prices up, though not by 20, 30, 40% annualized, by single digits. So that's some important news there on prices. Now let's talk about mortgage rates. Mortgage rates peaked towards the end of June, and then they tapered down back off a bit. And the reason for that being that inflation news came in that the actual inflation rate is a little bit lower than what they thought it was going to be. It's still high. It's still very high, but it's a little bit lower than they thought. And so that caused a reaction in the bond markets, which are closely tied to the mortgage markets. And so mortgage rates came off their highs. According to Mortgage News Daily, the average mortgage rate had actually gone well above 6%. It was up to 6.28%. And today, July 6th, stands at 5.5. So I would say expect continued volatility in the mortgage rate market. Rates are going to continue fluctuating quite a bit as long as we have unpredictable and volatile things happening with inflation and recession fears. Those are things that are going to cause ripples in the mortgage market. Here's an important point for anyone getting a mortgage right now. When there's volatility in the mortgage market, there tends to be a greater difference in rate between lenders because different lenders are pricing things different ways. So it might be a better time to shop lenders than you've done before. So that would be one important fact. But also the other important fact is discount points. In a normal market, normal or stable mortgage market, a discount point, meaning I'm going to go pay an extra 1% of the loan amount in upfront fees to get a lower rate. So in a normal market, I go to the lender and say, hey, I'd like to buy a point, and they'll reduce my interest rate by generally about 0.25%. So I might be able to take a 5.5%. I'm going to pay you a 1% fee, and they can take that down to a 5.25%. Well, what's going on right now is you're actually seeing in some cases being able to get as much as 0.5% from paying 1 point. So instead of going from 5.5 to 5.25, I pay that same 1 point. I might get, under the right circumstances, I might get a 0.5% reduction all the way down to 5%. So it would be an important time for you to inquire about the impact of points. And if it's something that you're willing and able to do, it might be a great idea for affordability, especially now that prices have hit all-time record highs. Buying a point might erase that for you. It's still going to cost you something, but if it helps you keep your household budget straight, there's a lot of peace of mind that comes with that. So think about that. So in summary, I'll just hit a couple of final points here so you know what to do with all this information. So overall, how's the market? Because everyone always asks, how's the market? The market continues to be strong, and every indicator we have indicates continued strength. Market time, showing activity, housing inventory, months of supply, all of it indicates continuing strength. It's just moderated from what it was at its wild peak. So sellers are going to face less competition right now than they will in the future. Remember, we said that the number of homes available is super low, but contracts have dropped a little bit. So as housing supply lengthens and we go from 1.2 months to 1.7 months to eventually it'll continue going up, that means as a seller, you're going to end up having more other homes that you're competing with to sell. But at the same time, prices are still going up a little bit too. So it's not all bad. If you're in a position to sell now, you'll have less competition. If you want to sell later, you might have more competition, but prices should have come up a little bit more by then. So as we've been saying for quite a while, sellers, you have the options right now. You have the options. It's a fantastic time to sell, and it should be a pretty okay time to sell in the near future if you'd like to as well. Buyers, what you're looking at right now is if you're in a position to lock your interest rate right now to get a contract on a home, do it. Get your contract, lock a rate, and ask about points. That's the best advice I give you right now, because we do expect that rates will continue to be volatile. That means they won't always be as low as they are today. There's going to be times when they're higher. And we also know that prices are going to be higher. So I continue my advice I've been giving buyers for years now. It is definitive. Homes tomorrow are going to cost you more than homes today. So if you're on the fence, you're on the borderline, you're not sure, get something now. I promise you, you're gonna look back and feel good about that decision. So That's my advice for sellers and for buyers, investors. It all depends on what you want. Please contact me. You can call me at the office, 708-808-0220, or just email me, Alex at Chicago Southland Homes. Go ahead and send me a message on any of our socials, and we'll get back to you. Line up a call for a specific consultation for what it is that you need. Hope this information is helpful, and I'll look forward to seeing you during the first week of August.